Tim, thank you so much for taking time out of your busy schedule. You are very well known in our Keller Williams lovely family out here, and we wanted to share with every. I'm going to mute people as we go. We wanted to share your knowledge. We know you are a busy man, and you aren't taking any new customers. Let's be really clear, you guys. If you can, when you pop in, mute yourself. Let's do some muting right now because I there we go. But again, I really appreciate you doing this. And knowledge is power. And I'm just going to open up the platform and say, you guys, this is Tim. Now's the time to ask all these questions. He probably helps at least 50% of our agents over in, yeah, we got some. Let's do that. How many people use Tim? Yeah, I love it. I love it. Yeah, he's been doing mine. I don't even know. I don't want to even age myself there. But yes, thank you. Thank you. Thank you. Thank you.
I've been doing it since I was 19 for you. How about that?
Thank you. Are you kidding me though? Anyways, all right, Tim, take it away, baby.
So, I was asked to speak by Michele. She didn't tell me about what or anything in particular, so I really didn't prepare anything.
We only had 2 days, you guys. This is it.
Well, I mean, I could talk about tax issues or, for hours. However, if you guys, I opened up the little chat thing here in Zoom, or you guys, I don't know if Michele can see you, if you guys raise your hand or something. I figured we could just do a Q&A. I mean, I know everyone has tax questions, and not often do you get a chance just to ask a question to a CPA or someone.
Okay, we're going to start right now, Tim. People are like texting me already. I am recording, just so we all know. Tim.
How about you guys ask questions and we'll go from there. And if that leads me to think of something else to talk about, if you guys have questions about PPP or some of those things that kind of are recent, legislation. Actually, I do have a really good something to talk about in regards to the employee retention credit. So I could talk about that.
Okay, it's already rolling. S Corp. Talk to me about S Corp.
Yeah, so I mean, S Corp, look, if you're making at least $60,000 a year net, so that's after all expenses. If you're $60,000 a year net, it makes sense to have an S corporation. The tax benefits are there, and the liability protection is there. But that you really need to be $60,000 net. And I think Jeff says, how should we set ourselves up? I think you mean just like how to do it.
Hang on, just for a second. Hang on. Patty, hold on. Patty, I can't mute you for some weird reason. I need you to mute yourself.
She's trying to talk to me.
Patty, I can't mute you for some weird reason. It's not allowing me to mute you. I can mute everybody else, but I need you to mute it. Okay. Awesome. All right, Tim, go.
Sorry. Yeah. So the S Corp is the way to go for real estate agents in California if you're making $60,000 a year or higher after all expenses. So I don't know if that makes sense, Jeff, to answer his question or not, but and how to do it, well, you just go to Secretary of State, or you can have an attorney, you can use LegalZoom. There's ways to do it that way.
The question was generally, I think your answer, man, was, so if I'm making 60K net or less, would you recommend like LLC or just run it through my personal, like a Schedule C?
Yeah, Jeff, being in California, you can't do real estate sales as somebody as an LLC. You're barred from doing that by the BRE, or now it's DRE, I think, again. So you just do as a sole proprietor on Schedule C, buddy. Yep. And there's actually a lot of cool benefits on Schedule C. If you talk to the right accountant, there's a lot of things you can get away with. If you have kids, if you're a parent, you can pay your kids through a Schedule C, and a lot of neat things that you can do that are completely free to you to do and actually can help you out quite a bit. Excuse me. My office is leaking right now. My 100-year-old building I'm in has had these leaks for years, and the landlord, I'm driving him nuts. But let me go put my bucket over here to stop this leak. Okay, all right, I'm back.
Okay, so I see. Is there any changes in 2020 for what we are allowed to claim or deduct?
No, that rarely changes. The actual the amount, what you can and can't deduct rarely changes in the tax code. The only new thing I'd say for 2021, part of the new bill 4 weeks ago, is that any business owner can deduct 100% of meals. Before it was 50%. And so Donald Trump wanted to kind of spur more restaurant going. And so they threw that in there in the new bill. And so going forward, you guys can deduct 100% of your meals, something to consider, when you're taking out clients and such. Karen Ruth says, is it better to be an LLC and taxed as an S Corp? Well, you still aren't allowed, from my understanding of the DRE, to be an LLC in California as a real estate agent. You can be an agent and do like flips or something in an LLC, even if it's taxed as an S Corp. But you can't start as an LLC as a real estate agent, even if you're taxed as an S Corp, is my understanding with the DRE. So that's the same thing for Chrissy. What are the benefits of an LLC versus an S Corp? An LLC, just so you know, only gives you liability protection. It doesn't give you any tax savings. An LLC, by definition, is a partnership, but you can be a single person, which is called a disregarded entity. But an LLC doesn't allow you to deduct or do anything more from a tax perspective. It's really for liability only. So to get a tax savings, the S Corp is the way to go in almost all circumstances, especially for real estate agents.
Any other questions, you guys? Let's chime in here.
Well, let me talk real quick about this employee retention credit. Oh, and I thought of something else. And the sick leave credit, Michelle, because this is important for everyone who has a Schedule C. So let me talk about the sick leave credit first. Back with the CARES Act back in March, the IRS instituted this new sick leave credit where employers were required, if someone was down sick with COVID or had to like quarantine themselves or couldn't do their business for whatever reason, they got to pay their employees this sick leave, and they got a credit for it on their payroll taxes, and so it saved them money. Well, everybody that had a sole proprietorship said, hey, what about us? We don't have employees. It's just us, but we weren't able to do our business. We weren't able, we got COVID too, the same way. And so basically now on your 2020 tax return, you can take the sick leave credit. So for whatever reason, if you had to be home with a child because the school was closed, if you got COVID, if you were taking care of your wife because she had COVID, you can take this credit on your tax return against your sole proprietorship earnings. And it's a pretty big credit. I was doing one the other day where I got somebody a $7,000 credit because they had to stay home with their kid for 30 days. And so that's a huge thing for anybody that's a sole proprietor. So be on the lookout for the sick leave credit as a sole proprietor. The other one is the employee retention credit. That was something that says, hey, if you have employees and all your single member S corporations count, the owners are employees. And so if you maintain payroll for these next 2 quarters, Q1 of 21 and Q2 of 2021, you get a credit to offset payroll taxes up to 70% of the wages paid each quarter, up to $10,000 wages paid. So it's huge. This is a huge credit going forward. And anybody that I had to do payroll for here that's on the call, I'm automatically doing this for you in our system because you as real estate agents qualify because you're partially shut down because you guys can't do open houses and all that kind of stuff in the county. So that's a really important credit. That's really important to kind of be on the lookout for.
Can somebody mute themselves, please? Thank you.
Regarding Jeff Ray says, regarding deductions, what are the benefits of differences of doing S Corp versus Schedule C? Like I said, a deduction is a deduction. Whether you're a Schedule C sole proprietor or you're an S Corp, you still get to deduct everything the same way. Except there's a couple little tricks you can do with having an S Corp, and one of them involves renting your house to yourself. But other than that, really everything's about the same as far as deductions are concerned. The reason why the S Corp saves you money is because your profit is not subject to self-employment tax as an S Corp, where it is as a sole proprietor. So that's the difference, Jeff, there. Mark Fern says, can you use S Corp, which was used for previous business, which was different from current real estate business? Can you use an S Corp, which was used for a previous business, which was different from yeah, I mean, I see what you're saying. So if you have an S Corp previously, and now you're doing business as a real estate agent, yeah, you can use the same S Corp. It doesn't matter. An S Corp can have 100 different businesses underneath it if you want. So an S Corp, I have actually several clients that one of the spouses does real estate under the S Corp, and the other one does like a scrapbooking business in the same business or whatever, because an S Corp is just an entity, and there's a lot of businesses that you can do underneath that umbrella entity. Rachel says, what was the name of the new credit to be looking for? Well, if you're a Schedule C sole proprietor, you want to look at the sick leave credit. I don't remember the exact name, but it has to do with sick leave. And then the ERC, or the employee retention credit, is the one if you have employees, which is a really important one. What is the deduction we can take because we have been partially shut down as realtors? Yeah, that's the sick leave credit. But the other one, again, is the employee retention credit that you can take if you have employees. Don't you have to count the rent for your W-2? Geneva, no. You don't have to. When you pay yourself rent from your S Corp, that has nothing to do with your W-2 wages, if that answers your question.
Can't hear you, Geneva.
Jeff says, who do you recommend that is taking clients? Yeah, I'm sorry, guys. Like I told Michele, I would love to help every single one of you guys. I really would. But if we take a new client, I have to provide less of a service to an existing client, and I just can't do that in all good conscience. So right now, we're not taking, unfortunately, new clients. We may starting next year, depending on if I can find someone to help me out or not. But yeah.
I need to elaborate on my question. Can you hear me?
Yeah.
Okay, so I just met with my accountant yesterday. I just finalized my S Corp papers, and he had recommended that I could rent my house back to myself for my business, but he said I had to count that as income on my W-2.
Was that a CPA?
Uh-huh. Yeah.
Well,
he said I'll talk with you about that later. He said, but you still have to count it. You'll have to count it as income. So what's the difference? You know what I mean?
I would argue that no, he's wrong. Rent is not wages. Wages that go on W-2. Rent there's two different types of rent. One, there's a tax loophole that says you can rent your house out to anyone you want 14 days a year or less, completely tax-free. It doesn't have to go on a 1099. So we use that tax loophole for our clients. So you do like 1 day a month, and that's a rent for a day, and then you can write it all off. The problem is if you're actually renting your house out, or let's say I have several clients that have like a commercial space and they rent that to their business. Well, that goes on a 1099 as rents. But that's still better than on a W-2, because W-2 you pay Social Security tax, Medicare tax, SDI, all these taxes, where rents you don't have to pay any of that. And so, yeah.
Well, maybe I misunderstood him. He just said I had to count that as income.
Oh, well, yeah, there's potential that, depending on how you set that up, it could be some income. But again, there's ways to offset rent income. So you put it as on a Schedule E as a rental. Well, then you get depreciation on your house. You get to write off a portion of your utilities and all this kind of stuff. At the end of the day, you're not going to pay the same as if you did it on W-2. So it's still a benefit that way.
Okay, so I can deduct like you said, the utilities, PG&E.
All of it, yeah. Anything to do with the house, yeah.
Oh, okay, cool. Okay, perfect. Thank you.
Oh, you're welcome.
Okay, so I want clarity here. So we could deduct the PG&E because we've been working from home. I like that.
Yeah, no, that's part of the home office. The home office has always been a tool that we can use on the tax return. There's been a lot of legislation over the home office over the years, and the IRS used to fight it a lot more than they do now, obviously. And so don't let anybody that's doing your tax return saying, oh, claiming a home office is risky. It's not even close to risky anymore. The IRS, has acquiesced many times in tax court to the home office. And so you need to be doing a home office on your tax return if you're not. Yeah. I'm trying to think of anything else kind of that came out recently. I don't know how many of you got PPP loans, but that's kind of a big thing right now. I guess I can talk about that real quick. There is a new PPP loan. It's called the second draw PPP. in order to qualify for it, you had to have had a 25% or more reduction in any one quarter in 2020 compared to 2019. So if you guys have any questions about that, I've kind of been dealing with a lot of those lately.
Tim, is that a deduction in income or a deduction in, or a loss in income or profit?
Yeah, great question. You know, unfortunately, the way they described it is gross revenue. It's the top line number, not the profit at the end of the day. I wish they did it a little differently, but it's the top number, your gross revenue. So if you reduce by 25% or more, either in the whole year or in any one quarter compared to that same quarter the previous year, that's what allows you to qualify for the new PPP second draw. It's not a profit, it's gross revenue. One thing to also keep in mind, the state of California still has not conformed to the taxability of the PPP loan forgiveness. They said the PPP loan forgiveness is not taxable when they forgive it, but you're not allowed to use the expenses that use the PPP money for as a deduction, which is crazy. The IRS came out and said, yes, you are. It's completely tax-free. Well, the state, it's really not tax-free at this point. I'm taking the position that they're going to eventually conform to federal rules. But just so you know, if you got a PPP loan forgiveness, right now it's all tax-free to the IRS, but technically it's still kind of taxable to the state of California until they act. So actually, I called our local assemblyman today and told him that he needs to get on this bill that was just introduced this week to get that conformity. Lisa asked about Prop 19 insight. You know, Prop 19 there's a lot to it, and even some of the counties haven't even figured out exactly how they're going to be handling it all. I'm not the Prop 19 expert, and so you know, I don't think there's a lot that we can talk about right now that would help anybody, or I don't have anything that I can say that would really probably, unless you have a specific question, Lisa, about Prop 19 or what client, just know that it's a bad thing for people who are going to be inheriting property, and keeping that property long term is really what hurts people. But unless there's like a specific question, I don't think I could actually address Prop 19 right now.
Brian has his hand raised. Brian Halstead.
Yeah, Tim, I forgot to ask you the other day when we were there. I have a significant medical event that cost me about $29,000. And I know this only specifically applies to me, but maybe it'll help the rest of the people. How does that affect your taxes?
Oh yeah, how did those earlobe extensions go, Brian? They work out okay?
No, that's what created the problem.
Yeah. Okay. So, you know, a medical expense is deductible either on your as a personal expense on your Schedule A. If it exceeds 7.5% of your gross income, and you know, you're going to get a tax deduction for it. However, there are ways to set up a health reimbursement account, or an HRA, through your own business. There's two types of accounts. There's the Section 105 plan, and then there's a new one that Donald Trump came up with a couple years ago under some of the new tax stuff, called the ICHRA. It's an independent contractor or something like that, HRA. I have one for my office. I always forget what it's called. But it's just a plan where it allows you to pay for medical expenses for your employees, which would be you and your spouse and your kids, if you're a sole proprietor or a S Corp. And you can deduct all those medical expenses as business expenses, Brian. So if you had some medical expenses in 2020 and we didn't account for them yet, call me later or email me and we need to talk, because we can actually maybe backdate some of that stuff for you. How does claiming home office impact taxes when one sells primary residence? Patrick asked that. You know, it used to be a big deal because you used to take depreciation on a home office, and then when you go to sell it, you have to pay tax on the depreciation you took on that home office. My only pushback with that, and that's still true, you still have to pay tax on the depreciation, but there's more to just depreciation of a home office. You get to establish that that's your place of business, so all your mileage then becomes tax deductible from everywhere you go. Then it allows you to free up utilities expenses as being deductible and all that kind of stuff, Patrick. But what it does is right now the depreciation offsets self-employment tax, which is an extra 15% that you guys pay being self-employed. When you have to pay tax back on that, you don't have to pay sales tax or self-employment tax. You only pay ordinary income tax. So by taking the depreciation on your home still saves you 15%, even if you have to pay tax on it later. So the home office is a win-win no matter how you look at it. There's really no negative to taking the home office.
Thank you.
Yeah. I received a letter from Peggy. I need to do a 1099 NEC for payments to my transaction coordinator over $600 before January 31st. What does that mean? So as of 2020, there's a brand new 1099 form. You guys are all used to seeing the 1099 MISC. It's the 1099 miscellaneous form. And you would 1099 a contractor or somebody that you paid commission to or something in box 7 of the 1099. Well, now there's a new 1099. That box 7 is gone from that old one. And if you pay a transaction coordinator or another agent or somebody that cuts your lawn and you're trying to write it off, if you send them a 1099, it's got to go on 1099 NEC in box 1. That's the new one for non-employee contractors. The 1099 miscellaneous, the old one, is used for rents and for some other things now. So now there's like 2 different 1099s you could potentially send to somebody. So that NEC is the new one that you're supposed to send to people. And you're supposed to be 1099 your transaction coordinators if you're paying them directly. So something to consider. How about a part-time employee? I paid her as a 1099, but my accountant said I need to payroll her. So Geneva, yes, this is a tough one. In California, the rules.
Can't hear you, Geneva.
What, Michelle?
We couldn't hear Geneva. Geneva wanted to say something.
Well,
Oh.
I told my accountant she only started in November, so I'm taking my risk for this year.
There you go, Geneva. Yeah, take the risk. I mean, it's a small amount, but look, in California, there
Do not
is.
take the risk. This is your team leader telling you, do not take the risk. I know history on somebody else that will spin your head.
No, who
Okay.
you're talking about, but this is a minute amount. She was 2 months. So,
How much money was it, Geneva?
huh?
How much money was it?
I think, well, I haven't tallied it up. Probably about 800.
Okay, at that level, it's really not a big thing. The penalty on that would be max 50% if they ever got questioned in EDD. But so look,
Okay.
you as the owner are taking big risks by paying part-time, employees on a 1099. They can sue you for not paying
Right.
sick time, for not paying
Right.
work comp. They can say, all kinds of things, and you can really get hurt in this world now that we live in, and especially in California with all the rules
Right.
being against you guys, the business owners.
Right.
So if you
Well,
have,
immediately I met with my accountant. I text her and I said, we're going to kind of have to pause it until I can get my bookkeeper lined up. And
yeah.
here's
If someone's doing work for you, and there's the new ABC test in California, and you can look them up. Just go Google ABC test California for employees. Basically, anyone that does work for you and that they represent you in your business, they're employees, not contractors. You're supposed to have them on payroll.
Already?
Okay.
Jesus.
Uh-oh.
And I just turned my video on. And that is the case whether you're incorporated or not, right? Even if you're doing a Schedule C and you have a person working for you, you still need to pay them through payroll.
Yeah, unfortunately, you do. Now, a transaction coordinator is a little different because they're not just representing you, they're representing their own business, and they do it for other agents. And so we can get away with, I recommend any transaction coordinator to get a business license, to get a business name, to get an EIN, kind of make it an official
With
business.
their own E&O.
Their own, maybe, that can maybe, or anything. Yeah, anything that kind of really makes them feel like they have their own business. And so Antonia asked, so I need to get my transaction coordinator social security number for this. Yeah, you would have to request that your transaction coordinators, and they're used to it. So they're used to, really what you want to do is get a W-9 filled out from them. So just say, hey, can I get a W-9 filled out? You can Google W-9 and get it from the IRS website, and they can fill it out. And that gives you their social and their address. So then you can do the 1099 to them. To do a 1099, there's a website called eFile4Biz. eFile and the number 4 biz.com. It's a great website. They're super cheap to do 1099s, It's like $3 at 1099 or so. So something very simple to do. Let's see here. Can we hand the 1099 in the EC in person, or does it have to be mailed? You can hand over a 1099 in person. There's no law that says you have to mail it. And it's not too late for 2020, Peggy. So you can do it. We have until January 31st to get them out. You can actually do it after January 31st. Technically, there's a penalty. For first-time offenders, though, the IRS is very lenient for first-time offenders for penalties. So if you have to do a 1099 late, it's probably not a big deal. Janet McMahon, hello, Janet. It's good to talk to you. Just to confirm, if you have a virtual assistant through a company, international, we do not have to do 1099. That is true. An international person is not subject to the same rules. It's just a business expense, unless they are here in the United States for any amount of time doing the work for you. So there's a little tricks to that, but if they're just, let's just say in India, they're always in India, they're an Indian permanent resident in India, you can pay them and not have to 1099 them. If they are in a country that we do not have a tax treaty with, it's different rules. So don't hire anybody from like Iran or North Korea, because you're going to get in trouble. Let's see, back to the 1099 to the transaction coordinator. I thought since the office was cutting the check, they would send the 1099. Typically, Antonia, your broker does not 1099 the transaction coordinator. I don't believe, right, Michelle? KW is not doing.
No, most brokerages don't, because you are the CEO of your own company, and you choose what subcontractors you want to use.
Yeah, that's exactly right. And then, really, isn't title usually cutting the check for the TCs?
Right.
Yeah.
Mm-hmm. With demand. Mm-hmm.
Yep.
But title's cutting the check at the direction of the agent where to disperse their money.
That's right. And so usually that's why, I haven't seen any tax court rulings on whether the agent is actually responsible for doing the 1099, but most people say they are. So that's why we always recommend you do it.
Can you repeat that website for the 1099? Because somebody just.
Yeah, e-file.
Okay.
4, it's the number 4, biz.com. e-file4biz.com.
Awesome.
Yeah. Oh yeah, there it is. Patty put it up there. That's the website. I think they charge like a couple dollars per 1099. It's super simple. It's a great website.
And it keeps you in your 20%, so you just have somebody else do it. You shouldn't be doing it.
Yeah, I'll also put a little website about the employee retention credit that I was talking about. I'll put that here in the comments, because this is a good resource. This is a good website that has a lot of that new employee retention credit that I was talking about. So you guys can take a look at that. Oops, actually I sent it to somebody privately here. Everyone, here we go. There we go.
Awesome, thank you.
Yeah, let's see. Tony asks, for a new agent who has not yet made any income, can we still claim business expenses? The answer is yes. If you are, if you've started your business and you have attempted to make revenue, if you're available to make revenue, you are allowed to take business expenses. So even though you haven't closed a transaction, you are still a business. Now, if you have a full-time job making 100 grand somewhere else, and you start a little real estate business and you try to take deductions, it's not so easy. But if this is now your new full-time gig, the fact that you didn't make a revenue yet doesn't mean anything. You can still take all your business expenses. So don't be shy on taking a big loss if you know the expenses are there. Your cleaner. What about your cleaner? Can you use that as a write-off if you are charging rent to your escort? Geneva, yeah, absolutely you can. I mean, a portion of it. If your house cleaner cleans your whole house, but you only have a small office, well, then you got to be careful. But if your cleaner happens to give you an invoice and it says office cleaning on it, and then maybe, you can make sure it's worded correctly.
Okay. But the
whole amount, if it's all for your office, if it's 100% for your office, yeah. You got to be a little careful with that one, but yeah. Just to confirm, once a TC is paid $600 or more, that is the trigger that mandates a 1099, correct? Yes, so it's only $600 or more for the entire year, not per transaction. So if your TC only made $400, well, then you don't have to 1099 that. Anything else, Michelle?
Let me think. I'm trying to think what was all on Facebook. There was so much. I don't know. So let's, I don't know. You need to come up with something, you guys.
Well, I'm also going to link an IRS FAQ on sick leave wages. This isn't the best kind of resource because the IRS website usually is kind of vague about things, but I'll post it in here anyway if you guys want to take a look. This has a lot of information about the sick leave credit and how it works for self-employed. And so again, this is like free money as part of the CARES Act. If you're self-employed and you were at home at all because of COVID-related sickness, or your kid was, or your spouse was, or your mom was, or your cousin was, and you had to be home, or if other people around you were sick and you just wanted to quarantine for a while and you couldn't do your normal duty as a real estate agent, that would be the case, you can take this little sick leave credit on your personal income tax return on your Schedule C. Well, it goes on Form 7200, but anyways, take a look at that because that's something you guys really want to make sure you capture for 2020. Somebody asked, is Escort Better Option than LLC under 2018 tax reform? S Corp has always been a better option over an LLC for the tax savings. The 2018 didn't change that. But again, a licensed real estate agent cannot do business as an LLC in the state of California. You can do flips as a real estate agent under an LLC, but you can't do real estate sales as an LLC. So you gotta be careful because the DRE doesn't allow a real estate agent to be an LLC for real estate transactions, Patrick.
Can you talk more about medical expenses and write-offs?
Yes. Real quickly, Janet says, how do you show evidence that you were quarantined? You just tell your accountant that you were, because you know who knows that you were quarantined? You do. And so you just kind of make sure you document maybe in your calendar that you had to stay home. You know, medical expenses, again, if you look up ICHRA, that's the new rules for having a small business and setting up an HRA for your business. You can write off medical expenses, any medical expense that you have, as a business deduction. So it would go on your Schedule C or on your S Corp return. In order to do that, you have to have at least one employee, but your employee can be your spouse, your employee can be your kid, an employee could be your mom. And so as long as you at least have one employee, you can have this new ICHRA. And again, it allows you to write off all your medical expenses, your eyeglasses, your prescriptions, your co-pays as business expenses. And it's just that simple. There's a lot of little tiny rules with that we don't really have time to get into, but something to look into or talk to your accountant about. What is the best for a transaction coordinator to be S Corp or LLC? Now it's a good question because a transaction coordinator is not a licensed real estate agent, so they can be an LLC. But again, an LLC does not give you additional tax savings. An S Corp gives you additional tax savings. An LLC does nothing for you except for liability protection only. And so, you know, if you're going to want some tax savings, and again, making at least 60,000 or so in net after all expenses a year, an S Corp is the one you want to be. Any small business wants to be an S Corp if they're making that much money. An LLC, again, is more for liability, more for real estate transactions, not for tax savings. Oh, Geneva, you are a question queen.
I love it.
My accountant said I can make withdrawals from my corporation account without identifying what the withdrawals are for. Yeah, I mean, that's just you taking profit from your business. So you can always take profit from your business at any time. You don't have to identify why you're taking money out of your business unless you want to try to write it off for some reason. You know, if you're just taking profit, it's just profit. Julie asked, is this being recorded?
I said yes, yeah.
It is. So I hope I didn't say anything too wrong. Let's see. Georgina says the retention credit applies even if you are working for a company. Georgina, can you clarify yourself? I'm not really sure what you are referring to there. I don't know.
Yeah. Only like not as an independent contractor, but just if you're working for a company and you're under their payroll. Does that apply to people or just?
I'm sorry, Georgina, do you mean if you are an employee of somebody else?
Yes, yes.
No, so yeah, the employee retention credit is if you have employees that you're paying.
Okay, I see.
Yeah, unfortunately, if you're an employee of somebody else, that means your employer would be able to get that retention credit on you.
Okay, I was confused about
Yeah,
that.
yeah,
Thank you.
yep. What if we are a licensed real estate agent too? Oh, Teresa asked if you're a licensed real estate because she was talking about maybe a transaction coordinator. As long as you're not doing licensed real estate transactions in that LLC. It's all about what you're doing, because you can, I mean, I have a real estate license, but I'm not doing transactions with a broker. And so, I don't have to follow the rules of the DRE. If you're just doing transaction coordinating, you just follow those rules. So you can be an LLC, do your transaction coordinating business, even if you're a licensed agent. Okay, Escort best to be. If we are a licensed real estate agent too, is that the best still? Yes, it is. Escort's the best. Could you talk about the new California retirement program that will be mandatory in the future years? Forget the name. Yeah. What is it called? I don't remember what it's called. It's a dumb new rule. I hope it goes away. Because you are now, as an employer, mandated to be enrolled into this retirement program for people, and it's just no better than people just doing their own IRA, in my opinion. So, because almost all of my clients have been able to push back their required date to be a part of this program. I haven't even done much, research into this new rule. You can look at it. There's a lot of information on the California website. Basically, you just have to have your portal open so any of your employees can access this new retirement program in California. But I'm not, again, I don't really know a lot about it. Yes, S Corp's the best if making over 60K for sure. Do you suggest taking a salary if you're an S Corp? Hey, Mark, that's a great question. It's not a suggestion to take a salary when you're S Corporation. It's a requirement. The IRS requires you to pay a reasonable salary to yourself for what you're doing for your business. So you can't get out of that. The only S Corps that usually get in trouble, and they get in big trouble by IRS audits, are the ones that try to do not enough salary. They make 100 grand and they pay themselves 10,000 for the year, and they've avoided all kinds of Social Security and Medicare taxes. You can't do that. The IRS says you're required to take a reasonable salary, and then that term "reasonable" can be kind of manipulated quite a bit. That's where a good accountant comes in to help you with that. Would you recommend Roth or traditional IRA? And this is from Liz. Liz, it depends on a lot of different things. If your income is too high, you're not allowed to put money into a Roth IRA. If your income is too low, you don't want to do traditional IRA. You'd rather do a Roth. And so, the Roth versus traditional question is not a broad, easy question to answer. It depends on your facts and circumstances of your situation. I'm a big fan of both of them. Honestly, they're both great saving vehicles, but it depends on your situation and what's best for you. So I can't really answer which one is best. Oh yeah, Cal Savers, that's the program there, Peggy. The PR companies are really pushing setting up alternatives. Doesn't apply to really small employers yet. That's true. Yeah, Cal Savers, California. Hopefully, I'm done with California. They can go to.
I get 5 calls a week from ADP, all the payroll companies trying to push other programs. And so I just want people to know that it doesn't come into effect for a couple of years.
Cal Savers, it doesn't even apply to sole proprietorships either. If you're just a business and you don't have any employees, you don't have to worry about it. But if you're an S Corp and you have a few employees, Cal Savers will come up someday. But I'll probably advise a lot of my clients, instead of doing Cal Savers, to start a 401k or a simple IRA or something that would be much, much more simple to help. I had a SEP IRA before, but now that I need an IRA as an employee to my corporation, can I take those funds from my corporation's funds? Geneva, as an S corporation, you can still have a SEP IRA, and your S corporation can still contribute to that SEP IRA. It's limited to 25% of the payroll you paid to yourself, but no, you don't need to switch anything. You can do a SEP IRA still from your S corporation.
I just got a text, somebody asking me, who would you recommend to go get an IRA or an IRA SEP?
You can do this yourself. If you guys have any savvy, through Fidelity or E-Trade or any of those, Charles Schwab, you can easily, I remember I was doing something just about a month ago in my Fidelity account, and I needed to open up a new IRA. And it took like 30 seconds because they already had my information. It was like, it's open, done, put money in it, you're done. So if you want to do it yourself, it's very, very simple, very cheap. Actually, it's free to open an IRA through on yourself. But if you feel like you're someone that needs a little bit of help, a little bit of hand holding, maybe some help with what to invest in, any one of your local brokerages are great. I try to stay away from the big banks. The financial advisors at Bank of America and Wells Fargo are typically not the best, not the cream of the crop. Go to local Charles Schwab, your local Edward Jones, your local financial advising companies in town, and really set one up there, because then they can kind of hold your hand. They can do everything for you, advise you on what investments to make.
You can hire my son out. He's really good.
Yeah, you can hire Geneva's son. Although I think that's pretty.
He's really good.
I'm pretty sure in order to do that, you have to be a financial advisor, so it might be illegal. So tell your son to be careful. Yeah.
Okay.
Okay, there's some more here. Can you write off medical expenses with a Schedule C, or do you need a S Corp? Is it too late to create an S Corp for 2020?
Yes, it is way too late to create an S Corp for 2020. You cannot make anything to do with the corporation or an entity retroactive. So if you're going to form something, it's got to be done ahead of time, Pedro. And then medical expenses can be written off on a Schedule C. It's the same rules that ICHRA that I was talking about was meant for the smaller, sole proprietorship type businesses. And so absolutely, you have to have it set up and ready to go, and have the right, and have an employee and do payroll for that employee and that sort of thing. I have a great referral for payroll. If you guys don't like using some of the big companies that charge a lot of money, I have a gal that does payroll for a lot of my clients. That can do things like backdate payroll easier, and she knows a lot about the hiring your wife so you can get one of these medical reimbursement plans. I'm gonna put her contact information here. She's gonna
and then Jeff has his hand raised. Thank you, Jeff.
Yeah, just a little bit more clarity, around, sorry for asking maybe the same question 3 times. We're talking Schedule C versus S Corp, because you're talking, with the S Corp, you're paying yourself a reasonable salary. So when the S Corp is paying me a salary, I'm putting that now on my income tax as income, right? So I'm being taxed as income from there. So what would really be the advantage of, let's say I'm a realtor and I have $100,000 a year in commissions, right? What would be the advantage of going S Corp and paying myself a salary that's now I'm having to be W-2'd for, versus just running it through the Schedule C?
Yeah. Okay. So let's use your example of $100,000, and let's say it's after all expenses, Jeff. Okay. So you have $100,000 net profit. If you pay yourself $60,000, which is kind of appropriate for a real estate agent, and then you have $40,000 left over as profit from the S Corp. The S Corp profit all flows through to you to pay personal income tax on, Jeff. The S Corp is a flow through entity. So that $40,000 goes to you personally. So you're paying tax on $60,000 as a W-2 and $40,000 of profit from an S Corp. So it's still the same $100,000. The benefit is that $40,000, Jeff, you do not have to pay Social Security or Medicare tax on. So you save yourself 15% of $40,000. It's a no-brainer. And so you just save $6,000 in Social Security tax in that example. So that's kind of like the crux of it, Jeff. There's a self-employment tax savings with an S Corp. Okay. Yeah.
No, that's clearly delineates it. I understand that now. That's great.
Yeah, and Lisa Aguilar is right. Jeremy Silcox, I do know of him. He's a great financial advisor. There's a lot of great, financial advisors locally. I always try, just so you know, a lot of the financial advisors, a lot of them are kind of like the same in a lot of ways. They rely on a lot of their back end, softwares to advise you on. It's really who you like and who you kind of connect with, kind of like a CPA. If you like the person, if you connect with them, it's a good thing. And so find somebody you like, somebody you can talk to that you trust. But Jeremy's a great guy and a good guy in general, an honest guy. So he is a good referral. And Peggy, I'm not sure was this a question? We can't pay you as an S Corp until you send me documents to set up. Oh, Peggy must be somebody in charge at KW.
Yep. And so when people set up an S Corp, then I can't pay them as an S Corp until I have their incorporation documents and their IRS numbers.
Yep.
So, so don't set it up and then call me in November expecting me to backdate everything, because I
Yeah.
can't.
Don't do
So
that
I
to
need
Peggy,
it-
guys. Yeah, Peggy does
Yep.
not want to try to backdate anything.
Yeah. Brian has his hand up. Thank you, Brian. Thank you, Peggy.
Yeah, this is one question I forgot to ask Tim when we were there. Peggy always asks us every year if we want a 1099 or no 1099 because we're an S Corp.
Yeah,
And,
yeah. No, Peggy, I appreciate about that what you do, because I get these emails from all your agents all the time. Hey, should I get to? It's better to just not get a 1099. KW by law is not required to send a corporation the 1099. So why bother to do it? Don't give Peggy the extra work to do it. And then once the 1099 is sent, on your tax return we have to match that 1099, but sometimes those 1099s aren't always perfect. It's not Peggy's fault, but just, you might have gotten a commission check, after the first of the year, even though they put it in the prior year. And so it's just better not to get 1099 if you don't have to get one. Julie asked, what does Grant Payroll do? She just does payroll. Her name's Lindsay. She's just fantastic, but she understands California really well. She understands the Section 105 plan and the HRA plans, and how you have to pay a spouse to qualify for one of those plans to write off medical expenses. And she's very inexpensive. I think her average cost for payroll is like just a few $100 maybe for the whole year. I mean, she's very, very reasonable in her cost. So, she's pretty awesome. What are the average costs associated with setting an S Corp up and then maintaining it? How long does it typically take the IRS to get approval? Patrick's asked this. You don't have to get IRS approval except for the S Corp status, but it's taking the Secretary of State about 5 business days right now to set up an S Corporation. So it can be really quick. The cost to set one up depends on who you use. If you use an attorney, it could be $1,500 to $2,000. If you do it yourself, it costs a couple $100. I usually charge anywhere from $750 to $1,000, depending on if I like the person or not. And then it costs about $800 per year for just the state fee to have a corporation in California. And then it costs a little more on your tax preparation, because now your accountant's doing an S Corp return, which is quite a bit more complicated. Oh, Teresa has another question. What if getting a 1099 NEC funds and they are just under 60K and also getting paid as an employee with a company? Would it be worth being an S Corp? Getting, not really, Teresa, because when you factor in the cost of having an S Corp, the $800 per year, paying your accountant, doing payroll, all this stuff, if you're only making 40K, 50K, which is still a lot of money, but it's just that the tax savings isn't quite enough to make the S Corp worth it. Now, if you did like 10,000 a payroll and kind of skirted the rules a little bit, yeah, you can make it worth it. But if you do the S Corp right, that's not quite enough money to really save you enough. I'd suggest looking at more doing retirement planning at that level, or maybe some other creative accounting if you're making 50K or so, as opposed to doing the S Corporation.
All right, you guys, what's going on? Any other questions? We're getting close. And I know Tim's time is very, very valuable. It was very hard to get him for you guys.
Teresa, you said you could be calling us soon. I don't know if you were here earlier, but fortunately my office is not taking new clients. So I apologize. We can't do it now. Maybe later, maybe next year. I'm trying. But we physically can't. I physically can't do any more clients. I really apologize. I wish I could, but we just can't.
We appreciate you, Tim, for coming on.
We would say that sounds like a high-class problem. Hire more employees, my friend. That's great.
It's about having more employees. It's tough. I don't want to get into
Yeah.
the specifics of business, but it's hard. Because I'm still responsible, and I feel responsible for doing stuff. So there's only so much I physically can do, and my employees can physically do. And yeah. So unfortunately, sorry.
No, that's great. Congratulations.
Thank you.
A couple more questions here. I have another suggestion for those who can't get a hold of Tim.
Awesome.
Okay.
Yeah. Thanks, Lacey. That's great.
Yeah. Are there any reasons why so are there other reasons why you recommended not to get a 1099 as an S Corp?
No. I mean, it doesn't matter. Like I said, it's just easier not to bother with it. That way you don't have to wait for it to come in from Miss Peggy, even though she's always on top of it. But, you just don't have to worry about it. And so there's no reason to get one.
All right.
Okay,
So
that was fun.
I think we're done. Tim, we appreciate you. I appreciate you. And thank you for taking all my emails and all the questions that we all have. And you're always there for me. So I appreciate it. So thank you.
You're welcome. All right, guys.
Round of
Appreciate you
applause.
guys. See you later. Bye. Take care. Have a good day.
Bye.
Look, go make
Everybody
some
stay
money.
safe.
Yeah. Okay. I see ya.
Bye.
Bye.